Hey, what is up, everybody? This is your boy Be Nice, aka FNP Trades. Today, I'm going to kind of show you guys like what my process is with this SPX and where do I think we're going to go from here. So, for those who know me and for those who know the system that I trade the Rifster EMA Cloud system. This is looking at SPX on a 4-hour time period. As we can see, we have a gap down here. We can mark that on our chart and bring that over. So we have a gap here, and then we also have a gap here. The immediate gaps are the ones that I'm more so worried about. But as we can tell, we're starting to kind of enter into correction territory because we've been running nonstop since June. Just continuing to go up, continuing to go up. So right here is where we kind of got our top on the market, and then we had a crazy sell-off on, I believe this was Thursday, going into Friday, and then we even sold off even more into that Friday time period. So what I'm seeing is because we had this gap down, the market doesn't like gaps, so we had a retracement and we filled that gap back up to the upside. So fast forward into today, we wanted to be able to look at the chart and kind of see what price was going to do. So let's say, so from Friday we had a little bit of a bullish recovery, but as you can see, we had this gap right here. So the market doesn't like to have gaps, but it gapped up. So on Friday at the open, we were immediately bullish and we were going up to this cloud right here. So if anybody was taking if anybody got into any trades and we saw that we had this gap up, our target was going to be this upper cloud here. 100% of the time, it's going to be this upper cloud here. So we all got into calls and we rode it up. We had a little bit of resistance, but once we got through that resistance, we started to try to fill the gap. So as you can see, we ended up filling the gap. What's today? Today is the 5th. We ended up filling the gap today, actually, to that upside. And then once we filled that gap, the market kind of tanked. So originally, I took calls at the open here, and once I saw that we weren't able to surpass the pre-market high on SPY, I realized like, hey, okay, so maybe we need to change our pivot. So looking at this trade right here, so other analysts in my group, they had already called out the play, so I didn't do it. But we were all on the same page. So once the market once price action broke below this area right here, and we started to kind of get below these clouds, that was where we would have wanted to start taking puts. So the system doesn't tell us to get in early, but the system tells us to get into the play once we cross below the clouds, which is what we did. And I apologize because this isn't live, so the clouds looked a little bit different when we were live. But right now, this is kind of where they're sitting at right now. But essentially, once we ended up breaking below and breaking into this cloud, that's where we wanted to start taking puts. All right, so people are wondering, how long do we stay in this trade? How do we know what the target is going to be? And where do we take profit? Well, here's the thing. Whenever we have these clouds here, we know that that's where those are targets that we can get to. So once we broke this MTF, we had nothing but this cloud as support right here. And as you can see, we're still in a bearish trend because this cloud is still red. So once we broke down below the 200 EMA, and this, I believe this is the hourly EMA right here. It could be either the hourly or the daily. We know that this is our last line of defense before we go to this cloud right here. So once we broke the 200, we had a little bit of a bounce. This right here would have been another entry, and this right here was also another entry because we had a breakdown. We had a retest of the EMA. Once we rejected the EMA, we came back down. We bounced off of that EMA, and then we kind of got back up to the 200, but not quite. And then we rejected that and broke down. broke down below, bounced back up, got back to the cloud, and then sold off for the remainder of these 20-minute candles right here. So if you were able to catch that move, you would have been. Let's say you didn't even get in at this immediate break right here. Let's say you would have got in right here. You would have caught SPX for a $40 move to the downside. All right, so whenever we get to these EMAs right here, we know that we're going to have what is called a bounce. And I learned this from one of the mentors. Like once we get to this higher time period EMA right here, this is like the last line of support. But the biggest bounce that we're going to have is going to be off of this first touch typically. So once we touched it, we immediately bounced right back up and hit the cloud, came back down, hit the cloud again, and then we had what could be called a little bit of a recovery here. So in the server, I told everybody, I was like, hey, I think this is the point where we're going to make our way back up to these clouds. So I'm going to take some calls to get up here. So I did take some calls. We kind of bounced, and we hit my target, and then I got out of the trade. So how did I know that we were going to go back up? Well, once I saw that we had a little bit of a recovery right here, and we failed to make a new low here, I pulled out my Fibonacci retracement tool from the high down to the low, and I can see right here that our fib level is right here where our cloud lines up. So I told everybody in the server, I was like, hey, I'm expecting price to get back up to 63.17, 69, and from there, I think once we get into this area, we're gonna have a rejection, and we're gonna sell off. And I will pull up the Discord, and I will show you guys that screenshot or that alert, that actual alert, so that you guys can see it. So here we go. I'm pull over the Discord. So on the Discord right here, I said, hey, risky, taking these 6330 calls. We're going to go, these 6330 calls, I bought them at 125. And I'm looking for 63.17, 69. We went 10%. I had already had my take profit set at $2.30, and on this spike right here, it spiked up and it got me out of the trade, and then it sold off, and then it kind of bounced back and started moving again. And so that's where people started to hit profit. But as you can see, I said SPX hit the target that I was looking for, which is the 63.17 area, and it got there. And then I immediately said right here, I'm expecting a rejection here to retest the 62.90 area for either tomorrow or Thursday. A break of that, we can get 62.60s. All right. And so we got up here, and immediately we had a rejection, and we rejected it. We rejected that cloud and started to go back down. So now what do we have left is that 62.60 area, which is down here, which is where our fibs line up. So I'm expecting tomorrow, if we don't gap down, or if we don't bounce off of this cloud again, which could potentially happen, we're going to start to try to make our way down into this gap right here towards this 62, 61.07 Fibonacci retracement level right here. So and I think that will be where we would potentially bounce, get a relief bounce, and then potentially probably sell off again into the bottom of this gap, because the gap itself is actually down here at 62.38, but I think that we can at least get these candles right here. So I actually drew that wrong. It should be that candle right there. So this is the whole gap, but we have an air gap, and as you can see, we could potentially clear out this area pretty fast, because there's no support in this area at all. So if we start to fall, we're going to fall quickly, because there's no EMAs to kind of hold this price back up. And this is the last line of defense right here, because this is a huge air gap. And the air gap is just a space where there's no EMA support or price action. So realistically, what can happen is we can gap down, and then the EMAs will have to just try to catch up to us. But there's literally nothing here to hold this level up except these order blocks. And the buyers that may be sitting right here. And then we can correlate all of this to SPY as well. We can see the same thing with SPY for the people who don't necessarily want to trade SPX. We do the same thing. I did the same exact thing with SPY here. As you can see with SPY, the EMAs line up a little bit better on SPY because you have the pre-market and after hours data, so you don't have like these gaps in it. But typically when I'm trading SPX, I look at SPY, and we can see right here at the open, once we broke down this level right here, it was just bombs away. So we had the 512 break and the 3450 break right here, which lets us know we bearish. We sold off down to this EMA. We had a little bit of a bounce right here. Would have been your re-entry if you were looking to. If you missed the initial entry, this is your second entry right here, because we had a bounce back up to the cloud, and then we sold off all the way down to this level right here. And so again, we went from we could go from the pre-market high to this low right here, and we could see, wait, let me remove all of that. So we can either go from the pre-market high, or we can go from the high of the day down to this level, to the low right here. We can see where our retracement point was going to be, and as we can see, the Fibonacci retracement level lines up with our EMA clouds right here. So we got our low, we had a little bit of a push up, a push down. We couldn't break below the low of day, and so that means that we're going to potentially have what's called a 512 curl. We had the 512 curl right here. This is that same candle where I was in SPX. This is the candle that spiked up, got me out of my SPX call, and then it sold off and then reclaimed and came up here. And then once we got to the clouds again, we rejected. And then so again, these Fibonacci levels are great to understand because these are reversal points for our trend. And as you can see, once we got here, we started to sell off again. So what I'm expecting to happen is if we break this cloud, which it looks like we're going to do so, because we have 1, 2, 3, 4, 5, 6 touches on the 10-minute time period. We probably have a couple of more on the smaller time periods, but all we're doing when we're doing these bounces is we're exhausting liquidity here. So once we exhaust this liquidity, there will be no more buyers stuck here. So eventually what will happen is we could potentially fall back down into this level right here. And for SPY, my fib bounce level is 624.29, but as you can see, we have a gap down here at this 624 level here, and the gap goes all the way down to 621. So in the event that we start to gap down or whatever, we could potentially fill 50% of this gap right here, or at least get into the gap and touch it, and before we get a bounce. And if we do start to sell off, that's about a $7 move. And that would be great for anybody who is swinging puts, because you could wake up and have a lot of money in your bank account if you're swinging SPX or spot puts, because if this thing goes, then it goes. And then just looking at the 4-hour chart, it looks the same here. So we got this gap here. Price could easily go back down, fill that gap, and then we could have a move up. But if we break down below 617.92, our next support level is this cloud right here. As you can see, once we break this cloud, we have no other support to hold this up other than the buyers that may be kind of sitting in these liquidity points. But this cloud right here and this cloud right here, these are our levels that price will want to pull itself back to. These are the magnets per se of where price action will like to go. So we will pull back here before we get any kind of move back up to the upside. And I think that 600 would be a good area for us to start loading up on assets. But again, there's no guarantee that this is going to that we're going to get that much of a move, but at least we could get to 615 hopefully by Friday. I'm really hoping that we can get that move down by Friday, but I'll take a move to 618. That's $7 fade off like that would be amazing. And I would hope that we would break these lows and start to tap down here, at least get to the cloud. And these clouds aren't static; they do move as price moves. So realistically, once we start printing more candles, the clouds will start to move kind of closer to this point right here, and then that's where we'll probably get a bounce. But yeah, that's my analysis on SPY SPX for this week. So hopefully, we're 2 days into the week. So hopefully, we can get this move by either tomorrow, Wednesday, or by tomorrow, which is Wednesday, or Thursday. We can get this move, and then hopefully on Friday we can have a little bit of a bullish day, so we can kind of get into some lottos for the upside. But yeah, be extremely cautious in this area because, like I said, we hit our top. SPY is due for a correction. So, and with the semis and everything else in the Mag 7 getting kind of heavy, like AMD right here, super duper heavy. We really don't want to be on the wrong side of things if the market does indeed want to go down more and correct this up. So yeah, if you guys like the video, please like, comment, subscribe. Please follow me on Instagram as I'm more active there than anything. But I promise you guys I will try to upload more videos to YouTube. And if you guys like any of this information and you want to learn directly from me, I will have a link in the bio, and you guys could follow the link, join my Discord community with other traders who are aspiring to be profitable and learn conviction and learn how to take these trades on their own. So thank you guys for watching, and have a good day.